So how do you dodge bullets? One way is to freeze time, another one is to buy time, especially in this options game. Welcome back, mindful investors. In this video, I'm going to talk about the art of rolling options, and I'll do a couple demos. So what does it mean when someone say that they're rolling the options? More often than not, they're just buying more time. And I'll show you in this example. Sometimes I like to do this. I like to scroll down all my positions and see which ones are in the red. If they're in the red, then I'll act on it and maybe roll the options. So right now, as we scroll through, we see two of these are in the red, Intel and JD. And I'll show you how I roll these options in this video. Okay, the first one, Intel. Okay, for Intel, I sold a call option for December 31st, $50 call. So right now, the stock price is hovering around the $50 mark. It would be wise if I rolled this option to a further date, because anything can happen in the short term. But my belief is that for the medium term, it may be treading downwards. So that's my play. So I'm going to sketch out the situation here. So what I'm saying is that by December 18th, the Intel stock will be below $50. Right now, it can be hover around here, and it's hovering around my $50 mark. But I want to take the risk, as this is really close to my $50 mark. If it's above 50, then I'll be in the red. So what I'm doing essentially is that I'm taking all this stuff and moving it outwards to a later date, maybe January 15th, like another month. And then the strike price could be higher as well, less than 55. We'll see if we can get the same premiums for these criterias. Okay, so what are my action steps? So before I sold the call for $50, right now I would have to settle this. I have to buy the call for $50. This essentially will cancel it out. This will cancel all this out. But what I'm doing is moving it across to SC55 maybe. And the premiums between these two should cancel out. We'll see what we have. For my IB, I can scroll down and I can see this option. It says roll position. So that's exactly what I'm doing, rolling my position. It also shows that if I choose the January 15th date, it's 38 days away from today. All right, my premiums here right now is $1.50, $1.44 to $1.50. So I'm gonna shoot for something identical. In my IB platform, I have this button to roll position. So I'm gonna click on that. And then for January 15th, if we shoot for the 55, we only get 48 cents. But we need much more than that. We need $1.50. What do I need to do? I need to roll it a little bit further out. So 1 month isn't enough time. So I'm gonna roll it to, let's say, February and see what we get. So for February, we still only have $1.32. But if we go for the 52.5 strikes, this $2 is greater than our $1.44. I still like the $55 buffer, so I'm gonna push it even further away in March. All right, that's perfect. So for $55, March 2021, we have premiums of $1.67. We're gonna click in and we're gonna look at exactly what we're doing. We're buying our $50 call to cancel it out, and we're selling a March $55 call for a higher price. So essentially, I'm getting a credit of 10 cents, which is $10. That should cover my commissions. Roll options. It says the bid is minus 25 cents and the ask is minus 8 cents. So as always, I try to find a middle ground and execute. And if it doesn't, then I have to lower it. So 8 and 25 in the middle, around 16 maybe. So negative 16. So if this trade is done, I get a credit back because I'm selling something at a higher premium. So we'll try to execute it and see what happens. Okay, it says order submitted, but it's not going through yet. And there's a couple reasons for it, because essentially you're doing two trades simultaneously. So the system kind of has to look at both of these options and see this differential. When it reaches my 16 cents, then they go snap, they go execute. But this is a hard action. Even if I do it personally, it's almost impossible, because once I execute the first one, then I jump back and go to the second one, that's already like 30 seconds past. And then all the pricing could be messed up already. I don't know how they do it. I'm just gonna lower it so it makes it easier for them. I'm gonna lower it to 10 cents and see what happens. There we go, order filled. We'll see what happened here. So right now we sold this new option for March $55 call, and we settled the other one. And overall, we got a credit as well. We bought back a December call for about $1.50, let's say, and we sold this one for $1.60. So the differential is 10 cents, so I've gained $10, and I bought 3 months of time. All right, we'll do another example. This one is slightly in the red, but let's do it anyways. Okay, JD $70 put expiring in January 2021. So right now it's about 72 cents. I'm gonna roll this as well. So right now I'm gonna look for the puts that's greater than 72 cents. Let's do the March again, 100 days away, 72 cents. So I'm gonna shoot for this $60 one at 90 cents. Okay, differential is about 9 cents. And then I'm gonna pick the middle grounds at about 13 minus 0.13. Okay, 13 cents, that's fine. We'll see what happens. Okay, order filled again, great. And then we'll go back and see what happened. We have JD, 2 contracts, and now we settled the previous one at 72 cents and bought the new one at about 85 cents. And then meanwhile, I bought in another 3 months time. Just looking back on these 2 trades, it may seem like a bulletproof strategy that I can just continuously push things back. But there's a huge caveat here. You have to kind of be right about your direction. Let's say for my Intel case, what if the stock continues to shoot upwards, past $60, $70, $80 and breaks all-time highs? What would I have to do? I just continuously sell these options to maybe 2022, 2023 for $100 strike price? Ultimately, that is possible, but I don't know. I feel like there is a downside to it. I've never had to do that before, but I think it is possible that you can just infinitely buy more time. Comment down below if you guys have any comments on that. In theory, it kind of makes sense, but practically, I've never done it. So how do you like this rolling options method? Does it make sense? Will you try to implement it if things go south? In a sense, you're kind of getting more lifelines while buying more time. I believe it's a win-win situation. It's won many times for me, but there's gotta be some downsides to everything. Again, if you have any idea, let me know down below. Like and subscribe to the channel if you found any value. Thanks for watching, take care, and I'll see you in the next one.